SoundHound AI grew revenue by close to 90% in the most recent quarter. And I don't think very many investors will doubt the company's excellent growth prospects over the next several years, perhaps over even the next several decades. But more importantly, we have to consider the company's financials, the costs of goods sold, the operating expenses, and the bottom line and cash flow, because the company is growing very nicely on the top line. However, the bottom line, where net income and cash flow are considered, is the company's real constraint right now. Can they grow revenue while also improving those bottom line prospects? Let's take a look at some of the company's latest financials to get a better idea, to get a better sense of the constraints on growth for this innovative artificial intelligence company.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
If you've been following SoundHound AI for the last few years, as I have, you'll have noticed that the company is very acquisitive. It is not only growing its revenue organically, but it's also made several acquisitions that's helping to grow the business. And if you compare its latest acquisition and you incorporate it into its results, the company says if you combine them for a like-for-like basis, we would now be talking about a customer metric in excess of $1 billion with a duration of approximately 6 years. And what management is talking about here is their backlog of orders, their contracts that they have secured for the next several years, right? So they're saying that they have an average contract length of approximately 6 years and a number in excess of $1 billion. That's a big number for a company that's going to generate roughly 100 million, a little less than 100 million in revenue this year. So they've got a strong backlog. And as I mentioned in the beginning of the video, growth continues to deliver excellently. So they continue to see double-digit automotive unit growth, and they saw double-digit unit price expansion in this quarter. That's the key there. So the automotive segment is one that is really strong for SoundHound AI. It makes the most sense. When you're driving, your hands are supposed to be on the wheel, and so you're not supposed to be interacting with devices with your hands. And so in the car, voice communication makes incredible sense. But for the company's financials, for its growth prospects, it's important to increase the unit price, the price they get, because that will deliver better unit economics, the bottom line. Sure, the company can grow excellently if it offers great prices to its automotive partners, but that could lead to bigger losses on the bottom line. But if they are able to extract a higher price per unit, then the unit economics will look much better, because when you get a higher price per unit, it offsets your cost of goods sold per unit, and so you're able to generate better margins. Now, the company's expenses are primarily driven by people. This is going to be a very sales-intensive business model for the next several years, as it needs to secure these contracts, convince these businesses that SoundHound AI's services will help them, and help the sale and explain and demonstrate how these products work and how they can help their businesses. And so they're going to need a lot of people to help facilitate these sales. Another good aspect financially is that last year, their top 5 customers represented over 90% of their business. But this year, their top 5 customers represent less than 1/3. And the reason this is important is because if you have a customer that is, for instance, last year they had one customer that represented 72% of their overall revenue. And as you can imagine, if one customer is that important to you, that one customer can exercise significant negotiating power against you. And they can say, well, give us this price discount, or we're not going to stay with you. We're going to cancel our deals with you. And that's a big threat, right? If you're potentially going to lose 72% of your business, you're going to give in to all of that customer's demands. But now the business is more diversified. The top five represent less than one third of their revenue base. And so one customer cannot extract that much value out of SoundHound AI. And so if they're faced with a big threat, they can just say, fine, you can walk. We still have a great deal of business outside of just what we sell to you. So that was really important as well for SoundHound AI to diversify away from that one customer. So in the third quarter, their gross margin was 49%. That was down year over year because of the impact of the recent acquisitions. But they expect that those acquisitions will deliver value over time. And they also expect that the profit margins will recover as they realize synergies from data center migration, tech stack integration, and cost rationalization. And this is one of two reasons why companies make acquisitions. For one, they make an acquisition for the incremental revenue it will add, for the incremental business categories they can enter. Secondly, businesses make acquisitions when they feel like there's big synergies to be expected. For instance, if you're acquiring a company and that company has a finance department with, let's say, 17 financial analysts, and you have a financial department with, your own financial analyst, you don't need all of the other company's financial analysts. You can maybe select the best of the best in their group and then let go of the rest. And the same thing can happen with the IT department, with the board of directors, et cetera, et cetera. And so you don't need duplicating teams on both the companies. So you can pick the best people in each of those departments and then let go of the rest of the people. And thereby the two companies combined need fewer people in the finance department, need fewer people in the marketing department, need fewer people on the board of directors, et cetera, et cetera. So you reduce the amount of people you need to operate this business now that it's combined. And that's good to see that SoundHound is expecting to realize those benefits. So sales and marketing expenses were 8.4 million in Q3, and that was an increase of 87% year over year. This is primarily due to the acquisitions. That's also because they continue to invest in go-to-market and across restaurants, automotive, direct and indirect. And their emphasis continues to be in demand generation, lead generation, and improving close rates with speed and efficiency. And like I mentioned earlier, this is going to be a sales-intensive business. You need salespeople in this business, and you need to if your salespeople are not also product people, you need to also match them. Let's say you send them out into the real world to try and close deals. You would, ideally match a salesperson with the product person so they can go meet businesses and explain to them the benefits of SoundHound's products, how they can implement it into their own business, and the cost benefits in lowering your employee costs and the sales benefits, all of which needs to be explained because these are not obvious in how this technology, this innovative technology can be incorporated. So it's going to be a very sales intensive business model, and you're going to see them raise their sales and marketing expenses. And if you're an investor in SoundHound AI, that should be expected. This is something that they need to do. What you'd like to see is effectiveness. You'd like to see the growth in sales and marketing expenses resulting in growth in top line revenue. That's the key there. You want to see revenue increasing while sales and marketing expenses are also increasing. So that's the big picture that SoundHound AI investors need to keep in mind here. Revenue is growing very nicely for this company, but their costs are also growing significantly, and they will likely continue growing significantly. So you've got to match this up and make sure that the revenue and costs are in line and not getting out of line, and keep a close eye on these metrics because this is a very volatile, innovative industry. It's not likely to have some linear expansion. It's going to be ups and downs, and most likely over the long term, it's going to be more ups than downs. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.